Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. That being said, in today's episode, I'm talking about one particular altcoin that I think has huge potential for the rest of the year and beyond, a crypto market update, our usual 404 Logic Not Found segment, and more. So make sure that you stick around for all the updates we've got in store today. Now, if you like crypto, please subscribe to the channel, hit the bell notification button, or you can follow the podcast on your platform of choice so you get a heads up whenever I post new episodes of Crypto Over Coffee every single Saturday. We are 87 episodes in, so thank you for all the support. And just a friendly reminder, please be aware of scammers that are in the comments that are posing as me and other crypto YouTubers. And also Instagram and Twitter pretty bad right now as well, including Telegram. I don't have any of these accounts sending messages out to people asking for money, whatever. It's not me. I also don't have a WhatsApp, so if the comment on YouTube doesn't have the name highlighted like you see here, it isn't me, and you can report them. Please be safe out there, folks. Now, in partnership with the folks at Keystone, I give away a Keystone tablet steel seed phrase backup device in every episode by picking a random comment from the video comment section. Just for transparency, the product is only available in select regions. So if you win and you're from an unsupported region, I'm just going to send you Bitcoin instead, which is also a pretty good reward, I might add. The winner of last week's Keystone giveaway is here on the screen. So big congratulations. And of course, I will be in touch for you to claim your prize. Now, as we do on this show every week, let's kick it off with a crypto market update. At the time of recording, the markets are pretty flat with no huge red or green candles to speak of, and Bitcoin is sitting at around 55K. Ether is around 3,600, Solana is at 155, I believe, 157, and Cardano is at around $2.28. In general, the markets seem to be slowing down after what was a pretty great week of price action with major bounces across the board with altcoins and, of course, flowing into Bitcoin itself. And what's undoubtedly causing this is institutional interest picking back up in crypto as a whole. And a report from JP Morgan corroborates this theory, indicating that institutions themselves are adding more Bitcoin to their stash than they are gold right now as they hedge against inflation. Now, we are far from out of the woods in terms of potential corrections because negative events or whale sales could turn the tides on this bullish market pretty quickly. But long term, this pattern of institutional investment should put people's minds at ease. From my perspective, the trend of institutional investor money flowing into crypto has only just begun, and we've not even seen a fraction of what's to come in years to come in terms of investment from institutions. Now, beyond that, I also look at the on-chain components here. Things like Bitcoin mining metrics recovering beautifully from the Chinese mining exodus that had people scared, or Ethereum poised to merge to proof of stake with a formal spec. These things are critical to a sustainable run-up sentiment-wise especially. And from here, I would expect price discovery to occur before the close of the year, barring, of course, any unforeseen negative events that could change the game. So we'll see what happens. Now, the title of this video indicated to you that there's an altcoin in particular that I have high expectations for in the coming months and beyond, and that altcoin is none other than Sushi. Now, my usual warning applies, okay? Because just because I'm sharing my thoughts about Sushi with you and why I myself like it does not mean that you should just take my word for it and go and invest or FOMO in. I'm not telling you to invest. I won't on this channel tell you to invest. I'm telling you my thoughts so you can do your own due diligence and either say, hey, I like Hashoshi's thoughts here and I agree, or whoa, Hashoshi is way off. But you always have to make your own decisions, be safe, and implement risk management. Always. Anyway, back to our regularly scheduled programming. As you may know, Sushi is representative of a growing ecosystem of which the cornerstone is SushiSwap, the popular automated market maker DeFi platform for swapping and earning yield in the world of fungible tokens. Undoubtedly, the success of SushiSwap alone, with 4.5 billion TVL and 120 billion in volume on its platform, is enough to argue that the underlying asset in Sushi is valuable. However, from my perspective, the Sushi ecosystem has huge potential as it lies in wait for two massive product launches or feature launches. And first and foremost, the SushiSwap automated market maker platform, that's hard to say, is getting a full-scale version upgrade. A full-scale version upgrade, which will bring improved capital efficiency and more user experience related elements like volatility protection features, and tools for crypto investors and traders. This update is dubbed Trident, and it is aptly named for its three-pronged approach, with a gas-efficient base architecture for asset deposits in bento box being the first prong, a multifaceted liquidity pool approach with 4 types of pools in the second prong, and the third prong dubbed Tines, quote unquote, which is a routing engine for the SushiSwap interface, which will provide users an intuitive way to perform multi-hop, multi-route swaps, where there may be no direct pair from the origin asset to the target asset they're trying to get. Trident is undergoing what I believe to be final testing phases amongst a closed group before launch here in the coming weeks as of the first week of October, and cumulatively, these Trident features are a massive evolution for SushiSwap, along with its launch on the Ethereum Layer 2 Arbitrum. However, Trident is not the sole reason I'm making the case that the Sushi ecosystem is undervalued right now, because what's next is arguably the best possible complement to a more usable and profitable and capital-efficient DeFi platform, a Sushi ecosystem NFT marketplace. Yes, you may have already heard about Shoyu, the consistently Japanese culinary-themed NFT marketplace that has been subtly hyped up for a while now, but it is presumably launching in October, and it is a very unique product to other marketplaces that I've seen so far. In true DAO fashion, the idea for a sushi-powered NFT marketplace was a governance proposal from a community member in the sushi space, which focused on making an economically viable NFT environment for creators and collectors alike. As we approach the launch of this product, I want to illustrate to you some of the core features that set it apart and kind of tie it back with the sushi world as the nucleus of this whole environment, that sushi token, X-Sushi token. We'll get there. The sushi marketplace is centered around what's colloquially dubbed the quote-unquote sushi or shoyu promise, as they say, which entails things like low to no fees for minting and selling NFTs, immersive and intuitive ways to search for and display NFTs, and generous royalties and profit share features that creators can use. This marketplace is focused on solving the major problems we have in the NFT space today, which is headlined by the fact that creators and collectors are basically priced out of participation because the pure expense and fees to get started are out of control. Shoyu will employ a mint on Polygon, sell on Ethereum strategy to keep fees down and leverage the interoperable nature of the two networks to benefit these creators and collectors. And instead of gouging creators on sellers' fees, Shoyu will only take a 2.5% cut of the transaction payable to X-Sushi holders in the sushi ecosystem as profit. You see where this is going, right? The sushi NFT marketplace rewards sushi holders that are staking for X-Sushi, tying it back to the DeFi side of sushi. More utility for sushi holders here. I mean, I'm already running long on this segment, but what you need to know is Shoyu is purpose-built feature-wise for creators with social token support, access to various ownership and auction features, a robust system for media upload, for minting, and a bunch more. And you should spend some more time digging into this to see what you think about this NFT marketplace. But it all ties back to sushi as the core asset for governance, for earning, for growing the ecosystem. As a holder of sushi or sushi that's staked for X-Sushi, you're earning rewards for the NFT marketplace and the DeFi platform. As it does well, you do well. And to me, if both Trident and Shoyu launch successfully, this could be huge for the sushi ecosystem. What do you think? Let me know in the comments. Now, there's actually one more project that I've been following for a while now that's also in the NFT space, and I figured I would share it with you today as well. Now, full disclosure, full transparency, I did get the opportunity to buy a modest private allocation of tokens here, and the point of this is not to pump the coin or to call you to buy it, but rather to tell you why I risked my own money on it, and you can decide for yourself. Seriously, don't FOMO buy because I'm talking about it. It's a bad thing to do. The project at hand is Enjinstarter, a new gaming and metaverse launchpad platform that is part of the Enjin ecosystem. As you know, I've talked about Enjin and my love for the project for years now, and I believe that many of Enjin's inventions, including the ERC-1155 token standard for NFTs, are critical to the future of gaming and NFTs in the crypto space. That inevitably led me to take interest in the two major offshoot projects from the Enjin ecosystem in Efinity and the subject of this segment, Enjinstarter. Initially, Enjinstarter will leverage Enjin's Layer 2 protocol called JumpNet for essentially feeless transactions, and then later move to the substrate-based blockchain tailor-made for NFTs, Efinity. Remember, Efinity is going to be a Polkadot compatible and hopefully formal parachain one day, opening up Enjinstarter and everything on the Efinity chain to a huge interoperable ecosystem of projects to incubate, to bring liquidity, and to do all sorts of cool things. Now, Enjinstarter is working to build a holistic offering for projects that wish to launch on the platform, from gamified NFT campaigns to token launch tools to in-game item NFT marketplaces and more. And conceptually, Enjinstarter is designed to be a hub for games and metaverse projects to launch their ideas and bring them to life, which, based on the momentum that blockchain gaming and metaverses are having right now and will likely continue to have, it's a pretty good spot to be in. It will take a lot of development work to realize the entirety of the vision here, but as a supporter of the Enjin ecosystem, Enjinstarter is a really exciting prospect, in my view, as a foundational element for projects launching in the Enjin world. Now, if we shift gears here a little bit and sort of point to something else in this space that I really value, which is interoperability, I want to point out a success metric for one of the primary interoperability projects out there today in the crypto space. That is Cosmos. Cosmos' Inter-Blockchain Communication Protocol, or IBC for short, just marked 1 million cross-chain transfers in 1 month's time. Now, on the scale of crypto platforms that might do hundreds of millions or billions of transactions, this might not seem like much. But for this new frontier, it's a huge feat. Interoperability at scale without compromised security and finality is quite literally the lifeblood of the crypto ecosystem's future. And Cosmos' success with IBC is a case study, albeit an early case study of what's to come in the future. And funny enough, a project that I shouted out a month or two ago on Crypto Over Coffee is one of the projects driving the largest portion of these million or so transfers over IBC, which is none other than the AMM, or automated market maker, Osmosis, who are absolutely crushing it in the cross-chain DeFi game right now. But just wait until other projects like Terra enter the fray officially in the wake of the Call 5 upgrade that's coming up. You probably know about Terra Luna because I've talked about it a few times here. But when that launches with IBC, the volume will only pick up from here. So I tip my proverbial hat, because I'm not wearing a hat today, to Cosmos. A big congratulations and a big thank you to their team for pushing this space forward with their innovation in this critical interoperability area. And really quickly, before I forget, I wanted to share with you quickly one more interesting tidbit of news that I myself will be following very closely because I'm trying to learn more about this project, and that is centered around a project called PolyTrade. PolyTrade is going to be demoing their MVP product at the World Blockchain Summit on October 13th and 14th, and I'll be watching this to see how it goes and what the product looks like. I mean, the concept of PolyTrade is fairly unique, and in a crypto space where there's a lot of duplication, this piqued my interest. Very few projects go after this linkage between traditional finance and crypto, or I guess the future of finance. And if done properly, PolyTrade could be a very significant project with significant achievements. The specific area of finance, or traditional finance, that PolyTrade is focused on is trade finance, the financial processes that drive international commerce and trade. More specifically, PolyTrade is seeking to provide a platform that enables small to medium enterprises who are traditionally capital constrained in the trade finance ecosystem to access capital from investors directly in the crypto space who provide stable coins for liquidity in the PolyTrade platform. So users like you and me contribute liquidity to liquidity pools, and PolyTrade, the platform, can provide sellers, people, these small businesses, the sellers, the capital they need, and offers crypto investors an opportunity to earn yield on profits from invoice purchasing. In effect, PolyTrade buys down the seller's invoices with the liquidity pool capital at a discounted price, and then when the buyer of the goods for that invoice pays the invoice down at full price, the profits are realized by the PolyTrade ecosystem liquidity providers, you, me, and everybody else. Of course, there are risks associated with this, as with anything else, but it's a unique approach to an age-old problem, and I'm really curious to see how this works. So I'm going to be watching. Hopefully you will too. Now, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails, or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please hit the like button, get subscribed to the YouTube channel, follow the podcast, whatever you can do to tell those robots that you're enjoying what you're watching or what you're listening to. Others might do the same and they'll send it over to those other people. So thank you so much for that in advance. Quick coffee break. But today's episode, or absence of logic, is brought to you by human nature, because human nature is one of those things that makes you say, this is why we can't have nice things. It ruins a lot of good stuff. Now, I say this because if I look back 10 or 11 years ago, when I first came across Bitcoin and first started delving into the trading card economy thereafter that Bitcoin used to fuel, it was never about making money back then, at least not for me and not for a lot of people in these communities. It was, of course, something that was talked about, but it wasn't the focus. Today, the cryptocurrency world that has blossomed from those early days with Bitcoin has become increasingly fixated on profit and the price of Bitcoin and making money. And in that totally understandable desire, I feel that we're losing the ethos and purpose of this technology, which is to create opportunities for people around the world who have none, to provide financial services to people who have no access to them, to provide safe harbor for people facing uncontrolled inflation, to make positive change with technology that enables people to own their identity, their money, and their assets. Like, these are all things that we should be talking about more. And all of that seems to take a back seat nowadays. Not everywhere or for everyone. I'm not that cynical, but human nature is to focus on what enriches oneself and not what enriches others or the collective. We all have that in us. I'm no better than anyone else on that human trait. I am the exact same way. But I believe that having awareness of this and being mindful enough to pause and consider why we support this innovative technology is important, why we think it should accrue in value. It serves both ends as well. Because project teams who do this and are mindful of the end from the beginning build better projects and subsequently end up being more successful and making more impact, which is good for the quote unquote bottom line, as one might say. It sounds cliche, I know all of this does, but it makes no sense to me to create a whole ecosystem founded on providing opportunities for everyone, in which it becomes very focused on the few profiteering to the maximum extent. Logically, it should be built on the model of if I win, you win, and we all win, because that means that the crux of the crypto ecosystem has been met, which is that all incentives are aligned such that no central intermediary needs to step in to forge trust or to equalize things and make it fair. Without this, the very purpose of what's being built here is lost. The positive impact that it can have and that it will have is being lost. And that is a 404 logic not found of epic proportions in my book. All right, my friends, it is time for sponsor time, and I want to thank my friends at SpookySwap for picking up another segment on the show today. As you may recall from the last spooky segment on Crypto Over Coffee, SpookySwap is a powerful DeFi hub on the speedy Phantom blockchain network, offering low-fee swaps on their DEX, a token bridge for cross-chain assets, and plenty of ways to earn yield through staking and more. Now, I want to call attention to a recent awesome announcement that splashed down this week for SpookySwap with a huge expansion to their token bridge. The SpookySwap bridge to date already had Ethereum and Binance Smart Chain, of course, connected to the native Phantom network. And this latest upgrade brings 3 brand new connections, which I think people will be excited about, in Avalanche, Polygon, and the Ethereum Layer 2 Arbitrum. And this opens up new opportunities and pairs on the platform, of course, but it also brings precious liquidity opportunities as well, with DeFi picking up steam on all 3 of these newly connected chains. I guess you could say Arbitrum is a layer 2 rather than a true blockchain, but you get the idea. Adding them to the bridge here is a brilliant idea. So well done to SpookySwap here, and if you haven't checked it out yet, I will leave a link down in the description below. I do also want to shout out the long-term sponsor of Crypto Over Coffee, Ledn, who makes this show possible, keeps coffee in my cup, and, gets this thing out to you every week. So Ledn is my go-to spot to earn interest on my Bitcoin and USDC, where I can passively grow my crypto holdings to the tune of 6.1% on Bitcoin and 9% on USDC. You just simply can't get 9% at a bank, right? You can use Ledn as well to take out a loan against your crypto to pay for real-world expenses in fiat currency if you would ever need to, which is a common strategy people employ to avoid selling their crypto whilst getting access to the capital that they need through a collateralized loan. Of course, you need to know the risks of taking such a loan because, like all loans, you do need to pay it back or you lose the asset you put up as collateral, but it's a great feature to have access to if you ever need it. So if you haven't tried Ledn yet, please try it out, sign up, check it out. I'll leave a link in the description and the pinned comment for you if you want to check it out. All right, folks, let's do some community Q&A. I always answer questions from everyone who watches the show, and I've got some questions from last week's episode that I'm going to answer here. And I want to remind you that if you have a question that you want answered, any question goes. There's no such thing as a noob question. Leave them in the comments below on YouTube or tweet me at Hashoshi4 as well. And let's go ahead and dive into these questions. All right, folks, first question of the day is from Arthur. A question that I've been asking myself a lot, but haven't dug into deeper. How will ADA holders be rewarded for staking their ADA once the whole supply of ADA is in circulation? So in Cardano, similar to how Bitcoin works, for example, the process of delegation and earning staking rewards comes from is derived from the issuance or the release into circulation of new ADA. So the question here is that I guess it's going to be decades, I think, maybe even more. It might even be centuries before, theoretically, that circulating supply hits its max cap. But when that time comes, even if we're not around anymore, what's going to happen? How are they going to be rewarded? And so the idea, at least, is theoretically similar to how Bitcoin is hypothesized to be dealing with this, and that is to derive the staking rewards, the overall rewards for ADA holders delegating, and to stake pools for minting blocks to be facilitated using transaction fees. The idea is that by that time, at that scale that it is reached, using decentralized applications, the revenues from transaction fees will be enough to subsidize the loss of new circulating ADA, as well as if the demand is high enough for ADA, even a small amount will cover the relative value in USD or whatever other fiat currency you're measuring against that pools are earning today and delegators are earning today. So that's the general idea. I know that it's not the best answer, but there are two things I'd like to mention. One, transaction fees are very likely going to be the mechanism, and that's what I think is illustrated in the paper. The second thing I want to mention, though, is that there is a really robust treasury in the Cardano ecosystem. And because the focal point is going to be to make this a DAO-based governance model all the way, everything that happens in the Cardano network is going to be voted on by the community. All that infrastructure is there. If the community votes, they could say we want to augment transaction fees with resources from the treasury, ADA from the treasury, which gets fed by the network already, to pay for those ADA rewards, to keep the game theory of the network in good condition. That might happen, that might not, but it is an option. That is the focus that I'm trying to point. So thank you for your question, Arthur. Really appreciate it. Second question is from Paul Axt. I'm already used to drinking coffee, watching your videos. I tricked, yeah. It is this thing where now I'm so distracted while I'm making these videos because I'm trying to talk to you and there's no pauses because I just have to keep talking that I never finish my coffee. And everyone teases me for it, but I have a little bit left today, so sorry. Anyways, I have a question. What advice can you give to a newbie in the NFT space? I love this question. Here's my number one piece of advice for a newbie in the NFT space. Use a hardware wallet, please. If you're on MetaMask or you're using, even if you're in the Cardano space, please use a wallet to store your assets that is connected to a hardware wallet. Do not use a hot wallet to store a $10,000 NFT. I mean, to some people, $10,000 might not be a whole lot of money. To other people, that's their life savings. To other people, still, that's money they could never fathom having. So just whatever that is to you, please just keep it safe, right? It's that simple. That's the first step. If your security is right, you're in good shape to start doing the NFT stuff. And I see more and more people getting hit with hacks. You also have to just be very hyper aware. Here's the latest and greatest hack that beginners need to be aware of. And I see beginners getting hit with this. I see experts getting hit with this. Please be careful with this. On OpenSea, say you're buying NFTs in the world of Ethereum. A lot of times people find public wallets and these hackers or malicious people will send NFTs to your wallet. Oftentimes it'll be NFTs that look rare or that are copies of rare NFTs, cool cats or Bored Apes or whatever that might be. Knowing that people will emotionally go and immediately try and interact with that contract, they will approve it for transfer to try and sell it. Behind the scenes, that contract that they've built gives permission to move other NFTs. They're getting you to sign a transaction which gives essentially a different level of access than you believe you're giving. And this is because there's a level of interface abstraction between OpenSea and the contract behind the scenes. So you have to make sure you check. If it's too good to be true, it probably is. The likelihood that someone's going to send you a Bored Ape for free, we're talking 0.0000001%, right? So if you get one, ignore it. Fixes will come for this in terms of an interface warning that says, hey, this isn't verified, or hey, this isn't legitimate. Until that day comes, you just need to be cognizant. In terms of picking NFTs, you got to know that any NFT that you buy has a pretty high likelihood of being worth nothing, or worth something but not having liquidity, as in not having a buyer that's willing to pay what it's technically worth by the floor price. That happens all the time. So when you buy an NFT, you need to be comfortable knowing that what you just spent, you will probably have a good chance of never seeing again in Ether format. And you better love the art that you're looking at, because it could end up not being something you can sell easily. That's another big rule. People don't like to hear it, but that's the truth. Whenever I buy an NFT, I am content realizing that I may never be able to sell that NFT again. And that's what you have to do. To find good NFTs, you have to find good communities. Communities that are not focused on, let's do a giveaway to keep the hype going. It's natural community that really focused on the art, that's really focused on the roadmap of the project, that's focused on the community part. Hey, Cool Cats is a great example. Other people that have cool cats, everyone wants to hang out and talk to each other. There's just excitement about the art, excitement about the experience around it. That's a cool, thriving NFT ecosystem. So you want to look for that. Things that are like, I want to quick flip this NFT and make a ton of money. Those are a little bit more risky, right? So I know it's hard for me to lay out a concise and clear NFT starter guide in a Q&A session. But these are some of the big things that I think about. If you have specific questions about the NFT space, please feel free to ask them, and I will do my best to help. Thank you for your question. Third question of the day is from Yan Da. Do you think taxing unrealized capital gains might be the reason why there's a big exit for crypto investors in December, like we saw in 2017? I don't. So the reason why I think people exit the crypto markets in December is the same reason why people exit the crypto markets at the end of quarters. That's because people realize, oh my God, I have traded crypto this whole year and I have to pay my taxes in April. And I'm closing the tax year. People rushing to close on capital losses to offset gains. You have a lot of people closing positions to pull money off the table so that they can pay their taxes, because people are not very disciplined like they should be about trading crypto. And when you make a gain, taking gains off the table into stable coins or fiat to pay your taxes. No one likes taxes, but you should be doing that. I'm not a tax professional. This is just common sense. So then at the end of the year, people start panicking and realizing, I have accrued, $20,000 of capital gains on which I'm going to have to pay, $5,000 of taxes, and I don't have $5,000 on hand to pay. So then they start pulling money off the table and doing so in a hurried and rushed fashion. That is why people exit crypto in December. The other thing is people now exit in December because they're afraid of 2017 December happening and going into a bear market. So they're capitalizing some wins then in December. That's generally why. You also see the same thing in January, where people want to incur capital gains in the following year and not that current year, so they can defer having to pay taxes for basically another calendar year. So those are some of the reasons why, if taxing unrealized capital gains were to come to fruition, and I hope to whatever higher power you believe in, that is not the case in the US and anywhere else in the world. If that were ever the case, it would have catastrophic effects on the market, because people would want out and they want cash so that they can pay their taxes, because it would be a serious change. I hope it doesn't come to fruition, but I don't know. Thank you so much for your question. And the last question of the day is from Ivalo Trikov. If I can ask, what will happen to ETH that are not staked for ETH 2.0? I have some ETH, but I haven't staked it for ETH 2.0, and and I won't do it. So should I sell it before the merger, or will it be switched automatically for ETH 2.0? So this question is derivative of, for people who have Ether liquid, not locked up on ETH 2.0 staking and earning yield. The answer is, the reason they're doing this merge, right? They're merging. Effectively what's going to happen is, and there's actually a DevNet now for the merge, and there's a plan in place for the merge. It's coming. It's happening now. It's been a long time. It's been a wait, but it's coming. The Ethereum proof of work blockchain that everyone uses today for NFTs and DeFi and everything else is going to be basically merged into the ETH 2.0 network, where it's basically going to functionally, the smart contract layer, the state, the ledger layer, like the major components and the data therein, the balances therein of the current Ethereum network are going to be merged into and attached with the new consensus mechanism behind the beacon chain for ETH 2.0. Long term, that's basically the idea, is that the Ethereum proof of work chain would be one shard in the new Ethereum 2.0 blockchain. Things have been kind of mutated and changed along the way. What you really need to know about this process, without knowing necessarily the architectural details or really fine details, is that your Ethereum balance, your Ether balance, and presumably the balance of all of the tokens that are stored in state on the network are going to be moved to ETH 2.0. I don't think there's going to have to be an action taken by you. It will be just like when you switch your network from Ethereum to Polygon, your same wallet will apply and all the balances therein will also apply. It should be interoperable and ready to go. So you shouldn't have to take any action. You don't have to sell your Ether. I can tell you this with confidence, that there will not be a situation where they're prioritizing those who have staked Ether in the ETH 2.0 contracts today over holders, because there are far more holders of Ether that haven't done this than have. And so I wouldn't worry about it. You'll be able to move everything natively. Your same wallet will still apply. Everything will be jolly good, as they say. So thank you so much for your question. Thank you to everyone who asks questions. Thank you to everyone who watches Crypto Over Coffee. If you have some time to stick around, please do check out this video that is linked here. It's a list of my top 3 VPN picks. You've probably seen the video before if you're a routine watcher. If you're new, please do check it out. It's great for any crypto investor to have, just to give you a little bit of extra crypto protection in terms of obfuscating your IP address and giving some encryption, particularly on public networks. If it's your thing, great. If it's not, no worries. Thank you so much to everyone who has watched the show, either today or in the past. I hope you and your family have a wonderful week and weekend ahead. And until next time, cheers. Back to our regularly scheduled programming.